Not. Varun Goel joins in. He's Assistant Vice President, Fund Management at KC Securities. Varun, good to have you on the show. We asked this question to Gaurang when he joined us. Let's put it to you as well. Would you be happy opening up long positions on the index or specific stocks right now? Or do you think this is just some kind of short covering rally which will not last all that long? What's the sense?
Good afternoon, Surbi. I think as far as the broader markets are concerned, the markets are trading close to 16 times FY11 earnings. If I put the FY11 earnings close to 1,050 rupees. So I think as far as the result season is concerned, we've seen a very good set of numbers. More companies have surprised on the positive than on the negative. I think the bigger question remains as to how the global cues are going to pan out. Now with the European Union deciding to throw away almost $1 trillion worth of rescue package, I think for the short to medium term, we should see concerns on Europe coming down. But I think one issue which concerns me a lot more than Europe is what's happening in China. And in fact, they have gone for a very aggressive round of tightening in interest rates, some real substantial curbs on the real estate space, and we've already seen the impact of that on the global commodity cycle and the real estate space. So I think one needs to be very careful and have a very close watch on what's happening in China, because if you look at last 3 years, China has led the global equity markets both on the way up and on the way down. So I think if the global markets were to stabilize at these levels, I think from a broader market perspective, we're still good for a 15 to 20% upside in Nifty from a year's perspective.
Interestingly, there are only 3 pockets of the market that are weak today. Telecommunications with Relcom and Idea being under pressure, oil marketing companies with HPBP, IOC being down 2%, and pharmaceuticals, which is being led down by... Varun, any thought on the pharmaceutical sector? Lots has gone wrong for this entire sector. Ranbaxy is due for numbers on the 11th. Any stocks that you're recommending?
Well, Rahul, as far as the pharmaceutical space is concerned, I think we are definitely going to see some headwinds because of the euro and pound weakness against the dollar. I think the companies which are having a significant exposure to European region in terms of revenues and profitability will definitely get impacted. I think the kind of companies that we like in the space are companies which are very strong as far as the domestic formulations business is concerned. There are a lot of companies in India which have at least 50% of their revenues coming from the domestic market, and at the same time having a significant presence in either United States, Japan, and those kind of countries which clearly haven't been impacted to that extent as far as the currency is concerned. Now, as far as the companies which are engaged in drug discovery and research and new chemical entities and all, I think they're trading at very high valuations, and the market is probably assuming that things will work out perfectly well for them. And in this line of business, I mean, you can be right in the first 10 stages and still fail at the 11th stage. So I would be very wary of investing in companies in that space. But other than that, domestic formulation-led businesses look very attractive even at these levels.
All right, Varun, just stay on with us. We'll take a short break on that note. Still looking very strong. Varun, very quickly, if you get allotment in this IPO at 161, will you sell the stock or will you hold on to it?
Well, Surbi, these are the kind of stories where clearly market is willing to pay a scarcity premium. We have seen that all the stories which are geared to India consumption story as such, companies which are geared to take care of the rising disposable income and the urban demand coming in. We have seen companies, restaurants, pizza chains, now gym chains and all that. These are great fundamental stories, good for long-term investments. But I find it very difficult to see any value at the current valuations. So I don't think I would I would want to hold on to the stocks at the current valuations.
Would you position yourself long at all in cement, Varun?
Well, Rahul, clearly last 1 month we have been clearly getting reports of cement prices across the country coming down. I think last year we saw a higher capacity coming in, especially in the southern part of the country, but the northern and the western and the central part of the country, the prices were holding firm. I think the latest trends definitely indicate that going forward, as more and more new capacity is coming in, I think around 50 million tons of new capacity is supposed to come in next 12 months. So I think there is going to be a tremendous amount of pressure on the prices. So I would tend to stay away from the space as a whole.
All right, Varun, we'll leave it at that for this afternoon. Good speaking with you. Thanks so much for taking time out and joining in. Caught up with Puneet Dalmia, Managing Director at Dalmia Cements earlier in the day.